Hello, this is Paula and I'm here with the weekly blockchain brief. I have a lot of interesting news and exclusive announcements for you, so let's go right into it. Since I have been off last week, we got a lot to cover. I tried to curate the 4 most important titles from the past days for you. So let's start with another big one from Coinbase. After they partnered with BlackRock, now they are in collab with Google to offer crypto payments through Google Cloud. In early 2023, Coinbase's payment service, Coinbase Commerce, will facilitate crypto payments for customers purchasing Google's cloud services thanks to a deal between the two companies. Google will only allow certain crypto assets for payment, including Bitcoin. Initially limited to certain participants, the option to pay with crypto will eventually be expanded to other customers too. Moving to BNY Mellon, which launched a digital custody platform to safeguard select institutional clients' Ether and Bitcoin holdings on October 11. This makes the America's oldest bank the first large bank in the country to offer the custody of both digital assets and traditional investments on the same platform. According to a statement, the bank will store private keys to access the funds and provide the same bookkeeping services offered to fund managers in other asset classes. As a reminder, back in 2021, BNY Mellon formed an enterprise digital assets unit to develop digital asset solutions and a platform to bridge digital and traditional assets custody. The bank was granted approval for crypto custody earlier this fall from the New York Financial Authority to launch this platform. The service is currently available only to select institutional clients, as I mentioned, in the United States. Not surprisingly, Justin's son has tons of followers. He made many people millionaires, and he still has large influence since the announcement he made pushed the Hobby token by 75%. After Justin announced him joining as a member the Hobby's Global Advisory Board, the Hobby's native token reached a 4-month high of $7.60. And the last news of today is more of an exclusive announcement rather than news. The Hedge Farm, which is backed by SwissBorg, will be launching its first vault on the 19th of October. If you're enjoying staking or getting extra yield, you'll definitely be interested to hear more about Hedge Farm. And then talking about Hedge Farms, I'm very delighted to be part of the team myself. And as much as you see me here as the girl presenting the news, I actually have a very different background. Prior to being principal in SwissBorg Ventures, I have mainly experience in traditional finance. So I graduated from finance bachelor and then specialized in derivatives. I did my master's in quantitative finance too. Focused my career into derivatives, structuring and algorithms. Once getting into crypto, I had been seeing this gap and the lack of this next layer, and especially tools for hedging. And I guess that when we are in a bull cycle, nobody really thinks about the downside. But once the market switched, a lot of people started researching how actually can protect my downside. And this is usually done through options. However, how this brings us to Hedge Farm, I'm very excited that I became part of the team because I think that this is a product that seems one step ahead of the market and what is needed. Probably say that there are other vaults out there, but I feel that how we compare to them is that first, this is a DeFi product. We wanted to provide a solution to black box issue that's existing in the market and caused bankruptcies. I always say that if you see a too high yield and you don't know where it's coming from, probably it's not where you assume it's coming from. This is a very simple financial rule. The higher the return, the higher the risk. So that's why always double check what are you investing, where your capital is deployed to generate that yield. And I think in hedge farms we solve that. We have quants creating the strategies and ensuring that the risk is limited, as well as I said, everything is transparent in the smart contract. So anyhow, without further ado, I want to invite Erillian, teammate in Hedge Farms, and actually the guy who's running the whole show. I think he can explain in detail what we have been doing, what we achieved so far, and a lot of exclusive information about the first vault. Hi Erillian, thank you so much for making the time to be with us here today. So I just wanted to, I already did a bit of an intro about Hedge Farm, but I would love you to make a short intro about yourself, the role in Hedge Farm, and also what we're doing there.
Yeah, thank you, Paula. It's nice to have you there. So yeah, I mean, on my side, I'm Erillian. I'm leading Hedge Farm. Currently, we are a team of about 10 people working on this. What we do at Hedge Farm, like we started the journey regarding like the bad investment journey that we see all over DeFi, you know. And also we've seen like some unsustainable token economies and protocol economies. And pretty much like it came from our background where, you know, we used those opportunities. We were thinking that they were like good opportunities, and at the end, like we ended up like being the yield for others. So we decided like to create like this protocol that is Hedge Farm, that will provide to user like what we call real alpha. It's the best risk reward vaults that are powered by the Association of Financial Engineering and DeFi Primitive. What we offer there, it's also what we call true yield. It's a yield that is generated like without boost or incentive, and it's only paid in base assets. And the last thing is about the capital protection. Right now in DeFi, it's really hard, you know, to know your journey regarding the risk that you are going to take when you enter a vault. We want something that is very clear and straightforward for the user. So we enforce capital protection of all over our vaults that we are going to have, and the risk that you take is really clear right from the start.
Great. Yeah, actually what I wanted to do is like give a bit of heads up to our subscribers with some exclusive info about the first vault that will be launching on the 19th of October.
Yeah, so the first vault is going to be called Alpha One. We have an underlying strategy, which is the DeFi CPPI strategy. And just to explain a bit about how it works, we've got like in this strategy, we've got in terms of allocation, we got 80% that goes into a yield farm. We've got 10% that goes into algorithmic trading. So we created like an entire algorithm just for that with our quant team. And we have like 10% as a liquid support for our trading operation. So just to give you some quick numbers, we've got 18.3% backtested APY with a 95 capital protection per epoch. So epoch are those periods where you lock up your funds, and it's 28 days on the strategy. So you're going to be entering with USDC, and the yield is going to be paid in USDC. And this vault we run on the Avalanche chain at the start.
Well, that's really great. And maybe we can also share a bit more information about what's going to be happening next, like what's our roadmap.
Yeah, in terms of roadmap, it's a bit packed. We have like the team working behind the scenes, you know, a lot. We have a second vault coming. So this one is going to be targeting 100% capital protection. And this one is going to be able to generate yield for assets that don't have. This is the main take on this one. And the estimated yield is around 3% right now. And it's going to be launched on BTCB and WBTC.E. And this one is going to launch in November onto Avalanche. For those people that know DeFi pretty much, you know that it's pretty hard to get a decent yield on BTC. And this one is going to be sustainable. And I mean, like 3% is already pretty good.
Indeed.
Then right after, we want to like really expand the number of assets that we support into our vaults. So for our Alpha One, we're going to try to, you know, have multiple stable coins that you could be able to deposit into the strategy, and even like volatile assets. And the goal is really to do exactly the same for the second vault. And we have other vault that we are also working on the background. We have automated concentrated liquidity management. We have like some option vaults with some new things that we are going to work on. And also we have like something that are a bit more for the degens, you know, which are like the degens version of our strategies, with little bit of like more reward but more risk, you know, at the same time. And also we are also working on the token. Like, you know, the goal is really about like building an entire ecosystem on Hedge Farm. And yeah, I think like the next months are going to be pretty great.
Yeah, I'm very excited about it actually. I've been just talking about the importance of diversification, importance of hedging. So I think that our votes will find market for. But maybe like just to summarize everything, in my opinion, those strategies, those votes are very suitable for people looking for something alternative, or people with particular strategy, right? Like they don't want to lose on the capital side, or they just want to put certain level of risk, and everything is very clear from the beginning. So from my perspective, it's like you get like a professional asset manager to work for you. So that's the biggest plus of it, plus everything else like DeFi transparency. So maybe if you need to pick up just a few things, who do you think that those vaults are suitable for?
I mean, I really think that it's really for, you know, seasoned DeFi investors and crypto investors. You know, for me, those are two different profiles. We have the people that are already in DeFi and the people that are using, the centralized exchange. And it's really about like building a portfolio that makes sense. Like you said, we are kind of like building like a professional grade vault, it's really this thing, but with the DeFi mentality. And this is why it's really important. And I think you mentioned it, but like the transparency, everything is on chain. We are not bridging funds into like something other. We are not a black box. Like we only have like the algorithm part, the algorithmic trading part that, we don't disclose the model, but at the same time, everything is on chain and is able for the user to see, So the goal is really about trying to bring like really like the professional efficiency that you could find into hedge fund really onto DeFi. And I think like with the offering that we have, we're going to get there.
Perfect. Well, thank you so much, Erillian. For everybody that's watching, I hope that you enjoyed that section. And if you're interested in Hedge Farm, or if there is anything more you want to know or any suggestions, please leave them in the comments. We'll really appreciate that. Since we already used a lot of time about hedge farms, this week I'm not going to be going through the macro section. And also there is nothing too notable to mention there else than the high inflation that came for the last month. And there are a lot of questions why people are still like seeing the inflation, why more retail investors are not shifting towards crypto. My answer to that is that the higher the inflation goes, the higher the probability that Fed will continue hiking the rates. And the more they hike the rates, the less money supply there will be in the market and less money overall for investment. As much as we think of crypto as alternative asset class, it's still highly correlated to everything else happening simply because it's part of the economy. That's what we want long term, right? To be part of the economy. So in my opinion, it's impossible to be completely uncorrelated. Anyhow, so let's move to the VC section. You would probably have guessed that I'll start with the massive Series B round raised by Uniswap. Uniswap Labs, the startup behind Uniswap Protocol, raised $165 million at valuation $1.66 billion. The round was led by Polychain Capital, while the existing backers A16Z, Paradigm, SV Angel, and Variant also participated in the current round. This valuation is a great bargain given that last year the fully diluted market cap reached above $22.5 billion. And next we find a deal that I personally found interesting in terms of what we're doing in SwissBorg. Arch is a decentralized asset management protocol that creates well-diversified tokenized investment portfolios. And I'm interested to see such great backing in the project, showing that there is increasing awareness of diversification need in crypto, as we already know in SwissBorg. We recently launched our thematics, which exactly help you choose a well-diversified sector portfolio so you don't put all of your eggs in one basket. You can go and check it out in the app right now if you had updated it. Regarding the Arch deal, in a seed round co-led by SoftBank spin-off Upload Ventures and DCG Group spin-off Upload Ventures, Arch raised $5 million. Thank you so much for listening as usual and wishing you a great week ahead.